time out of your day to watch this video. Today, I'll be going over T-Sauce, and I'll be going over an example of a trend shift. Now, as you can see, this is the 15-minute time frame, and over here on the right side, I have my 5-minute time frame. So I'm going to go ahead and jump into it, starting with our 15-minute entry. But actually, I'm going to point this out so you can see. Over here on the left side where we have our 15-minute entry, if you notice, our A and B, our top and bottom trend legs, as you can call them, are separate than the 5-minute. And what I mean by that is, one second, why is it not letting me move the screen? Okay, this is interesting. I know what this is. Unfortunately, it does this from time to time. They don't want us to be great. Tragic. Too bad. I know how to get around it. So anyways, the top and bottom of the trend legs for the 5-minute time frame are the actual 3 and 4A for the 15-minute. And as you can see, the 15-minute top and bottom trend legs, where you would put your Fibonacci from the top to the low, aren't even on the screen for the 5-minute. And reason being is, once again, the purpose of using the two time frames is to help you analyze and find a better entry. For instance, your fib entry that you would have on the 15-minute time frame is up here at in the 73 250s area, is just a rejection candle that doesn't even really tell you can get in on the 5-minute. So as you use these two time frames, it gives you more confluence in your ability to figure out exactly where you are. But I'm gonna go ahead and walk down this 15-minute time frame. As you can see, you have your impulsive leg that's in the direction that you want it to be, and your number one is the first cross or the first candle closure over the 200 moving average, signifying a trend break. And everything else is the price actually trend shifting. So this is how you would get in. So one would be your closure up under the 200 EMA. Once price closes back above the 50 EMA, this is where your 2 is. So it crosses the trend for the 200, that's your 1, and then it breaks back inside for the 2. Now your 3 are your fib rejections, and as you can see, the blue boxes indicate where your fib rejections are. You can see as price moved up and hit the 78.6%, price literally failed to close above. It would not close above the 78 cents. This is indicating your first fib rejection, and as you can see, we even have a stochastic cross down as well. And once price closes over the 50 moving average, which is this specific candle right here, this would be your 4A. So this would be your first continuation entry candle, and this is why I mark this as your entry. But price will not always continue off that first break. It'll actually give you a break and retest. So this is how your 3A and 3B come into play. The A signifies your break, and your B signifies your after retest. So you have your break, retest, same thing. Price would not close above. Actually, it did close above the 786 right here, but then got immediately rejected back down. So how your fib entry will work, right? You will see where price comes back up and it shows you where the rejections are. You have a rejection here of the 71, this red bearish candle. Then you can see how it applies to the 786% as well. So when price comes back and closes above the 50, when price is moving back up, what I would do is I'll set sell limits at the specific price at the 786, and I'll have my stop loss above the trend, the top of the trend, which is up here, which I believe from your fib entry candle is a, excuse me one second, it's a 13 pip stop loss. And from your actual continuation entry, it's a 38 pip stop loss. So I'll have a sell limit here, and this will be my first entry, which is my fib entry at the 786, and then I will wait for the price to actually close beneath for my continuation entry would be down here. Now here's the thing, some people like to actually say that the trend is continuing once price actually just closes over the 50 moving average, like so, which is this candle right here. But as you can see, the body of the candle is still inside of the 50 EMA, and usually when that happens, there's a high possibility of price pulling back. So I like to wait until I get an actual candle closing beneath the moving average to signify that. So I'll have an entry at my 786, which is up here, at 73 253, and I'll have my second entry down here, the continuation candle at 70.30.15. And as you can see, price came all the way down to our -1.3 extension zone, and from our continuation entry, price, the target was 38 pips, and from your fib entry, it was 62 pips. Now, if you don't know what I mean by my -1.3 extension, all this is if I were to put a fib from the trend, from the top of the trend to the bottom of the trend, okay, all this is an extension of 13% more than the extended zone. So this is what I use for my first target, and for my second and third targets, I usually use somewhere between a 272 and 414. That's usually a whole level number. In this case, it's your 72,500. That'd be my TP2, and my TP3 would be this -618. But we don't have to worry about that because price didn't come down here for the 15-minute entry. But if we go back over to our 5-minute entry, you will be able to see that all three TPs would be hit. For example, price went all the way down to your third target. If I can zoom out far enough. Okay, actually, right here, price it's not letting me move the screen for whatever reason. So as you can see, price came down from your continuation entry 41 pips, and from your fib entry. Oh, that's okay. Excuse me. I wanted to identify that for your 5-minute time frame, the entries are a little bit more different, simply because, as you can see, price did not come back up like it did on the 15-minute time frame and give you that same rejection as it did. It actually tried to come back over the 50 and failed. So this is a time where you would not be able to get a fib entry on your 5-minute time frame. If price closes back beneath, which in this case, I'm sorry, I'm not having this marked. This would be your 4, okay? And of course, these would be your 3. Now, once price close beneath, if it tries to go back up and fails to close back above, and it exceeds your first continuation entry candle, and then, excuse me, this is how you know that the trend is failing to even retrace back far enough, and this is where you would get in and where your next continuation entry is. So let's play this back. Price comes down, comes up to your fib, and rejects down. Once price tries to close back up, this is where you pay attention to your stochastic. You can see it comes back over here into the overbought area. Once price is overbought again, if it closes back beneath and you have your stochastic cross, the trend is shifting. You see you have your histogram, your blue histogram is smaller, the momentum is shifting. You have smaller and lower crosses. So overall, price is shifting. Another thing I want to point out is if you have your top and your bottom trend and price comes up and exceeds it, normally you would have your stop loss right here. Let me give you a little key tip. If you see a double top, in this case where price came up and made a double top, there's no real exact point where you would use as your top trend because it's your double top. Now it looks like this one is a little bit higher, but that's besides the point. If this happens, then you would like to move your stop loss to your 113 extension leg. Reason being is because you can see that price has made a double top. So when price comes back up, the banks want to clear people's stop loss that think they know what's going on in the trade. And as you can see, price rated the high by about like 3 pips and then went lower. So I safely had my stop loss at the 113 extension zone, and it was protected and never ran and never hit. So price finally made its continuation down to the downside. So this is how you would take the trade from the 5-minute perspective. So once again, it's important to use 2 different time frames so you can identify and see how you are moving within the markets and how your entries would be different. Now, here's a question that someone may ask. How many entries would I use and which ones would I use? Overall, the higher time frame maximizes the best identification of the trend. So once I see price come up here and then back over here, again, right here on the 15-minute, where I have my fib set, I would have my fib set at this price for my 15-minute fib rejection entry. But as you can see, this is just your first three. So you wouldn't be entering over here on the 5-minute anyways. So as price came back over here on the 5-minute, you would have entered, probably got activated by this candle. Price would have went down in profit, draw down by 3 pips, and then you would have continued into profit. So in reality, on the 5-minute, you did not want price to come back up here anyways, because you would have already been activated for your 15-minute fib entry. As in for your 5-minute, you would want it to see exactly what it did. Price retraced, failed, the bears are more in power, and as you can see, price dropped immediately 20 pips from the second rejection. So this is how you would take it. And ultimately on the 5-minute, price hit all 3 TPs on the 5-minute, giving you around 40 pips. So once again, thank you for taking your time to watch this video. Stay blessed.